Hi, welcome everyone. This is the fourth Construction Equipment Power Hour webinar. So I hope you've got your favourite sandwiches on hand and a cup of coffee and ready to join us for the next hour, not only to hear a couple of good presentations, I hope, but also to join in the conversation and questions about what you may hear today. We're just letting in a few more people, in a minute or so we will kick off, but before we do that, maybe just one or two of the house rules to go through. And that's me. There's a picture of me looking somewhat younger than I do on your screens at the moment. So we'll pass on from that. Those of you that have joined us before in these get-togethers will know the rules of the CEA house. It's a bit like the Big Brother house without the drama. And first of all, we run these sessions in accordance with the CEA corporate compliance rules. So that means that we don't talk about anything which can be construed as commercially sensitive. The webinar will be recorded and made available together with the slides on the CEA website for others that can't join us today. And don't forget to stay on mute unless you're asking a question. I was on a call the other day on Zoom, and one of the senior members of our industry entertained us for quite a few minutes at the beginning of a meeting, eating his crisps. So if you're intending to do that, please do use the mute button. I'm sure you're pretty much familiar with the world of Zoom, and for some of you it's probably your 27th Zoom encounter of the week. But if you have some questions, if you can use the chat facility, that would be really helpful. Although you'll also get an opportunity to dive right in with questions. But if you can use the chat, that will just help ease things along a little bit. And if you could turn off your video, I understand that's quite helpful in conserving some of the bandwidth. And finally, if we do have some technical difficulties, you'll know that these will be totally beyond our control and your control. Because the gremlins sometimes intervene, but hopefully they won't this time. And today's menu, we have two speakers. There's Chris Sleight, who's the Managing Director of Off-Highway Research. Now he's going to give an overview on world markets. He gives a little bit of a world tour, in particular looking at Europe, China and India. And then our homegrown speaker is Paul Lyons from the CEA team, who's going to be focusing on the UK market and the ins and outs of the UK market. So I hope you'll find that useful. We will take questions after each speaker, so please be prepared for that, and we'll endeavour to keep to our promise of this whole session only lasting an hour, so that you'll be free by 2 o'clock. So I think we're ready to introduce the first speaker. So that is Chris Sleight, who's the Managing Director of Off-Highway Research, a job he's had for something like 5 years now. Many of you also remember him as the editor of a couple of leading titles for KHL for many years, but he swapped his editor's pen and scalpel for a calculator and a crystal ball so that he can put out market analyses and also give us some forecasts and ideas for the future. Chris has been a great supporter of ours over the years, as has Off-Highway Research. We're not allowed to do advertising in these sessions, but I did happen to notice that their two most recent reports, one was on the global rental industry and one was on the UK construction equipment industry in relation to Brexit, and we contributed some information to that as well. So that's the introduction to Chris. So I'll ask you to kick off, Chris, and to share your screen, and would like to hear what you've got to say about the world.
Thank you very much, Rob. Great pleasure to be here today, and I will indeed attempt to share my screen. It's always a little bit easier said than done. There we go. There we go. So rather than sort of have the preliminaries, I thought I'd just dive straight into it. At the moment, we get asked, of course, what the impact of coronavirus is on, or will be on, the construction equipment industry. And I think this graph sums it up fairly well. This is global equipment sales, the types of equipment which Off-Highway Research measures, and it does really illustrate the kind of the ups and downs of the industry. It is a cyclical industry, of course, but in the last 10, 15 years, it's been more cyclical than usual. First with the global financial crisis, the stimulus in China, which came after it, and then a period in the early 2010s where nothing was too great. From the end of 2016, early 2017, most markets in the world moved up, and demand hit a new high in 2018 and 2019. That was always going to decline this year. It was surprising in some respects that it held on as well as it did last year. But we were forecasting a moderate decline because the conditions were reasonable, we felt, going into 2020. And of course, we've revised that forecast a number of times in the last 6 months in light of what's happened with coronavirus around the world. I think the thing to say here is that if you look at this downturn, you know, we expect the markets to be down about 13% this year. And yet that's worse than a 5% decline, but you know, it's not really all that terrible considering what's gone before. And if you look at the sort of the volumes that the global market would land at, not too bad at all, really. But as ever, it is important to dig below the headline figure and understand a bit better what's going on. And the difference is China. China, of course, was first into this pandemic and then first out of it in March and April this year. And as is the Chinese government's way, they got straight to work putting some very significant stimulus measures in place. The main one was the Ministry of Finance allowing provincial governments to issue a lot more bonds than they'd previously been allowed to. And they were special bonds. They came with the proviso that the money had to be spent on something useful. So they couldn't just roll over old debt. They had to spend it on infrastructure or agriculture, or environmental protection is another big area. And they, of course, all have elements of equipment sales to it. So whereas previously we were expecting the Chinese market to dip this year, this stimulus effort, at the moment we're forecasting about a 14% increase in 2020. Those of you that know China will know it is a very difficult market to forecast in, but certainly the market will be quite steeply up. And if you look at the kind of volume that will be achieved in China, very high. The boom that we saw in 10 and 11 with the again stimulus driven was higher, and it certainly won't reach those sort of peaks. But the problem that we had after this period is, of course, the stimulus was relatively short-lived. All the equipment was left sitting around in the market with not much work to do, and that really damaged sales. So it really was a classic boom and bust that was created last time. There is going to be a bit of a boom, and of course there will be a downturn afterwards. But at the moment, we don't expect this sort of prolonged and deep recession to follow. So that's what's happening in China. And if you look at the kind of volumes that will be achieved, 350,000 pieces of construction equipment this year, that's 35 to 40% of global demand happening in China. So that is a lot, and it really does tip the balance globally. So if you strip China out of the equation, you get a different picture for what's going to happen in the rest of the world. And again, it always was going to decline, but instead of this fairly moderate slowdown, we're now seeing a fall of about 22% this year. That's not as bad as we saw 10, 15 years ago with the global economic crisis, but it clearly takes the volumes from what has been a fairly good and healthy level back down to, not so great levels. We think that'll be relatively short-lived, and that the bounce back that's happened in the second half of the year will continue, and we will get back to reasonable levels. But the point I would make about that is a lot needs to happen for that to take place. Looking in at it in a slightly sort of closer scale, one of the exercises we've been doing this year is looking at the quarterly results in the construction equipment industry. There are about 19 or 20 OEMs who are stock market quoted, and so who release this information on a quarterly basis. And it does illustrate, I think, a bit better what's happening on a closer scale, which is kind of more important at the moment. There is a seasonal pattern to the market. Normally a third quarter is the lowest one in any given year, and then you get an uptick in the fourth quarter, and then again the first and second quarter. So what happened towards the end of last year is you did get that weak third quarter, and then the fourth quarter fell again. So that clearly indicated that the cyclical decline was setting in last year, really before coronavirus was on our radar. And then what's happened in the subsequent two quarters is, rather than any sort of seasonal uptick, sales have fallen again, and with it the industry's profit margin. I think, again, you could look at this graph and say, well, actually it's not too bad. We're not really at those sort of low levels that we saw 2015 going into early 2016. The margin, while not great, is still reasonable. But again, within that, there are companies that are doing well and companies that are doing not so well. So the important thing, I think, here is we're just starting to get the third quarter results coming out. And the key that we're looking for is that there are those signs of improvement, that revenues start going up, that profitability improves, and that the company's order position improves. So that they're kind of the signs that we'll be looking for to kind of fully judge how 2020 and beyond will work out. So the outlook in terms of COVID-19, yes, the world does need to get back to normal, which it has to some extent. But going into the winter, and obviously as we're experiencing here in the UK, the instances of infection are going up and things are locking down a little bit. It is really important that economies around the world keep ticking over, excuse me, and we don't have another dip. As I said, for our forecast to sort of work out, we do need governments around the world to keep doing their job, not just this year in terms of job protection, but for the couple of years going forward. The immediate stuff about supporting businesses is of course crucial, but after that there will be economic weakness. That's absolutely inevitable. And although construction and construction equipment should be relatively lightly affected, there will be impacts. That could be mitigated if good, strong, meaningful stimulus programs are put in place. And I think the lesson from 2008, 2009 that governments learned is that stimulus is a good thing, and it will be helpful. So we would hope that materializes. But again, it's cost a lot of money for governments around the world to keep their economies alive in the last 6 months. And there'll be countries that kind of can do it and countries which can't do as much. I think the point to say about heading into difficult times is, from a business point of view, they are generally the times when you have the biggest opportunities. If you can remain nimble, if you can react to the situation quickest, then you can win business. So it's, yes, we have to be in survival mode and we have to get through this, but I think it's important that companies keep their eyes on what opportunities might come up in this period. But of course, going back to the point about being nimble, it's a very fluid situation. Things will change. Plans you make may get blown out of the water. So it is important to kind of stay alive to the changing landscape and react to it as well as possible. So that was the general global picture. What I'd like to do in the second half of my slides is just take a quick look at some key markets. The emphasis that I'm trying to make here is on trade and what the opportunities are for UK companies. And clearly, notwithstanding all the obstacles that Brexit is throwing our way at the moment, Europe is nearest. Our main trading partners are Europe, and historically many of the many of the CEA members will do most business in Europe. So again, quite a long scale to look at the cyclical ups and downs. Following the global financial crisis, it was sort of a slightly bumpy couple of years and quite poor volumes in the European market. But sort of 2016 onwards, we saw pretty robust growth. Equipment sales last year reached a surprisingly high level, I would say. We were starting to get concerned that we were getting to this sort of territory again from the mid 2000s, when the market clearly overheated, and that may store up problems. However, in the light of coronavirus, we are going to see a fairly steep drop off this year, probably of the order of 20%. And then again, hopefully, as long as normal returns, as long as governments continue to legislate thoughtfully, we should see some stimulus work helping to bring the market back. Europe is a sort of quite a diverse place, really, and that also goes for how the different regions have been affected by coronavirus, and therefore how steeply they'll turn down this year. The least affected we see as Germany, Austria, Switzerland. 12% is still quite a big fall in anyone's language, but in the context of the rest of Europe, it's not too bad. And indeed the rest of the world, most markets, if you're falling 15% or less, you're probably getting off fairly lightly at the moment. So the Nordic region would also be in that category. Italy's interesting. It was obviously one of the earliest and worst affected countries by coronavirus and had quite a prolonged and strict lockdown. So it's perhaps a little surprising that it isn't among the worst of the downturns. I think the point about Italy, which is important, is that while most European markets had peaked last year and were going to head down anyway, Italy was still in growth mode. There was still some good infrastructure projects coming through. So you have this situation where, yes, coronavirus has had a big impact in Italy, but the direction of travel before coronavirus was upwards rather than downwards. So that does mitigate the slowdown a little bit. And then going on down, as I said, the average across Europe is about a 22% downturn this year. And then the worst affected markets are kind of the ones you would expect. The situation's obviously been very bad in Benelux, Iberia dominated by Spain. And here in UK and Ireland, there's a bit of a British disease to knock what's going on at home and sort of say, why can't we be like other countries? We don't have emotion in this forecast. We have taken a long, hard scientific look at what is happening in the market. And unfortunately, the UK and Ireland are suffering as badly as they are because the government's response to coronavirus has been so poor. And obviously, as we head into winter and some of the things that have been in the news in the last couple of weeks do illustrate that the government isn't particularly on top of the situation. You add to that the uncertainty around Brexit, and that really is why we're seeing such a steep downturn in the UK and Ireland this year. And obviously, Paul's going to come on and talk about the UK in particular in much more detail in a minute. What happens in other countries does affect the product mix because wherever you go in Europe, the task that has to be done in construction is fairly generic, but the tools that are used are quite different. So it does affect a little bit what's going to happen with the sales of different types of equipment in 2020. There's less variance than there is from country to country. But having said that, things like wheel loaders and mini excavators probably the lesser affected, partly because Germany is such a big market, particularly the compact wheel loaders. And at the other end of the scale, backhoe loaders are going to be particularly bad because the major markets in Europe are UK and Spain, and also telescopic handlers will take a bit of a hit, partly because of the demand in UK, but also in France. So if we're talking about opportunities, if you look at Europe and exclude the UK, the demand structure is, the high volume machines are are fairly well known. You've got the various types of excavators, mini excavators, which in our language is machines under 6 tons, crawler excavators and wheeled excavators, of course, popular in France and Germany in particular. Then you have wheel loaders, which are not as high volume as excavators, but still pretty big. And then telescopic handlers, which are very popular tools in many European countries. So that's the demand in Europe in unit terms. You of course get an effect where the machines a pyramid effect, I should say, where the machines that sell in the highest numbers tend to be the smaller and therefore the lower value ones. So if you look at it in value terms, it does turn things around a little bit. And it does show that the most valuable opportunities are things like crawler excavators and wheel loaders, the sort of medium to large size wheel loaders, we would say. And then these sort of smaller types of equipment like mini excavators and telehandlers, while selling in big numbers, are not as big in terms of the value opportunity. So if you're an OEM or if you feel the sales of equipment in Europe outside the UK are what bears on your business, then that's, I think, an interesting thing to look at. If you're more on the component side and looking to supply OEMs, it is worth having a look at what's produced. This is just a general slide to cover all of Europe. And it does illustrate a few points that the machines which sell in the highest numbers are not always the machines that are made here. I mean, yes, in Europe, there are a lot of mini excavators sold, produced rather, and a lot of crawler excavators produced, but there's also quite a lot of equipment of this type imported, particularly from Asia. The things we make in higher numbers are things like telehandlers, which are a big net export, and also backhoe loaders, although the backhoe loader is waning in popularity in certain parts of the world, so that's sort of falling away a little bit. So if you're a component supplier and looking for trade opportunities nearby, I think this might be give some interesting food for thought. As Rob said, I'm just going to take a look at 2 quite interesting markets in Asia. It is obviously quite difficult to reach markets in Asia from a pure UK base, and you're going to need some form of representation, if not your own subsidiary in these parts of the world. But these are the big markets and very much the up and coming markets. India has had a tough time, really. Last year, there was a general election, which is always very disruptive to the industry. The procedure, as soon as an election is called, no one's allowed to issue public works contracts because it's seen as a way of perhaps influencing the electorate. So the election is a very lengthy process, so that does cause a downturn. I went to the XCon show in Bangalore at the end of last year, and the mood was really picking up. You know, month on month, people felt that the sales were growing. But India has been hit very hard by coronavirus, a huge number of cases and some very strict and very prolonged lockdowns, which are still very much in force. Most of our staff in Delhi have not set foot in our office since March, effectively, and with no option to do so. Having said that, the market is coming back now. We've seen some clear signs of that. And all the things that have driven the sharp growth in India in the last couple of years remain. Narendra Modi was re-elected as Prime Minister, and he's very much has an agenda to invest in infrastructure, particularly roads, but we feel that's pivoting a bit to rail and other things like ports and airports. So we see that as being very positive for the construction equipment industry. And as India gets over the pandemic, we expect the sales to start climbing again, hopefully hitting a new high in 2 to 3 years' time before another election is scheduled, and that will of course knock things for a year. But there are definitely opportunities in India, and we see, notwithstanding the current difficulties, the long-term prospects in India as being very good. It's a slightly odd market. A huge number of backhoe loaders are sold there. And of course, JCB is very much the dominant force in that. there does seem to be a bit of a change taking place in that as contractors are getting a little bit more sophisticated and as some of the projects are getting bigger, they're moving towards crawler excavators. So we do see going forward the sort of the relative share of crawler excavators probably growing at the expense of backhoe loaders, but backhoe loaders will still be hugely important. They're very popular in rural areas for, you know, things like small scale irrigation and maintaining roads and things. So the backhoe loader's not going anywhere in India, but we do see the future growth as being in crawler excavators. The mobile crane industry in India is very big and very scary because it's locally made pick and carry cranes, which are not the most stable. Again, they are growing in sophistication and they've got a lot safer. But although it's big unit numbers, it's really not really an accessible market, I would say, if you're an OEM. It is really dominated by ACE and escorts rather, and it's very hard for anyone else to get a look in. And then the other types of equipment are fairly small. Pavers and compactors, of course, are significant for the road building sector, and that is a fairly attractive part of the market. Compact equipment is growing ever so slightly in India, but it's hard work with so much cheap manual labor available. And the wheel loader is very much a niche product in India because there are so many backhoe loaders there already. China, just to kind of finish on a high, it did make a very, after a very sort of strict lockdown, which is something the Chinese government is kind of quite good at. It has come roaring back since April with all this stimulus that's been put in place. And that is, as I said earlier, taking the market to a new high. The question really is what happens 2021 and onwards. Again, China does present opportunities, but you very much have to be there. And if you're trying to sell equipment, you not only have to be there, but it's also very helpful if you have a Chinese brand. About 75 to 80% of all equipment sold in China is an indigenous Chinese brand. And although some of them are owned and controlled by international OEMs, it is difficult to sell in China if you're not Chinese. And we do see a bit of a creep towards those Chinese brands in the last decade, as many of them have developed their own excavators of a passable quality. So yes, China is an opportunity, but it is also a tricky one, and you obviously have to invest to be there. The structure of the market in China has changed quite a lot. It was historically a wheel loader market because that's what all the indigenous manufacturers made. They did make excavators, but they weren't great going back into the 90s and 2000s. And it was really the international OEMs arrival in the 90s and 2000s which stimulated both crawler excavator and mini excavator demand. You're now in a situation where the Chinese OEMs are making their own crawler excavators. So it's popularizing the concept. It's putting them out into the much bigger and better established distribution channels that the indigenous OEMs have. And it's also seen the price come down quite dramatically. It's a very price sensitive market, and it's a very odd market in that people tend to chase volumes and market share rather than profitability. So the price for crawler excavators and mini excavators is falling to the extent that we're not actually sure many people are making any money or possibly making a loss on each sale of mini excavators at the moment. But that's the way the market is, and you kind of have to deal with it to participate there. So that was my very brief world tour. I'm very happy to take questions now if there's time, or hand it over to Paul. But yes, over to you, Rob.
Yeah, thanks very much, Chris. That was a good canter through some key markets in the world. We had one question come up which asked some questions about elsewhere, and to show that we're truly international, Katie Duck is joining us from Australia at the moment. Katie, did you want to ask your question directly to Chris?
Yeah, hi Chris, can you hear me?
I can, yes.
Hi, hello from Australia.
Hi.
Our background is from obviously being in Australia. We are an American OEM. Interested in any sort of comments you may have, particularly around different machinery such as crushers, screens, that type of capital equipment in quarries and mine sites, or if you see it as a sort of similar situation as some of the other equipment that you've outlined.
Yeah, unfortunately, we don't cover crushing and screening equipment. It's something we get a lot of inquiries about, but it's a very difficult area because you have a couple of very big manufacturers and then lots of smaller local ones. So it's very hard to get a grip on what the market size is and what the market trends are. You know, my feeling and my assumption is that they do follow more or less the trend that you would see for the other types of capital equipment in mining. So I think if you know about what's going on with dump trucks and large excavators, that's probably going to indicate what's happening with crushing and screening equipment. The other thing that we do to get a bit of a handle on it is that one or two of the companies which produce that type of machinery, you know, Metso, Sandvik, and the Terex minerals processing business, they do publish quarterly results, and one or two of them say a few things about orders. So you kind of have a few proxies there to follow the market, but nothing direct, unfortunately.
No, thank you. I appreciate you taking my question.
No
Okay,
problem.
sorry to disappoint a little bit there, Kate. We've had a lot of issues over the years trying to get statistics together for crushers and screens and never quite succeeded on that. And so it's been a bit of a difficult nut to crack. Another question too that's been put up asking about the situation in the US, and I think you've explained, Chris, it's not somewhere you measure. We did have a speaker actually lined up to talk about the North American market. But he was unable to join us, partly to do with half term and also some other considerations. But we hope to bring that into a future session.
What I would say on the US, Rob, is we do have some data on it, and we do have a view on it. The problem at the moment is I believe there's an election coming up. Not sure, but you know, really we see that as more than usual a crucial deciding factor. You know, again, not wishing to make a political point or get into politics, but it seems that the Democrats will retain control of the House no matter what. So, you know, what happens in the presidential election is if Biden wins, then he'll be a president with a majority in the House, and he'll be able to get quite a lot of whatever policies he wants through. And he has talked a fairly good game on stimulus. So, you know, again, not making a political point, but from a pragmatic point of view, that would be helpful. And obviously, if Donald Trump is re-elected, I don't really see. I think politics in the US is so divided and partisan that I don't really see much being able to happen because of this tension between the president and the House.
Okay, thanks, Chris. I'm going to just slide in one quick question, and then I'll invite Paul to give his presentation. You talked a little bit about the Chinese market there, and obviously the preference for Chinese produced products within that market. Of course, there is the Belt and Road initiative from China, which we don't hear so much of at the moment. I guess we've been thinking about COVID a lot more. But do you see a change going forward in the profile of the supply of machines elsewhere because of the influence of the Chinese in terms of soft loans and investments in a lot of countries around the world now as part of the Belt and Road initiative?
Yeah, I mean, I think it'll have an impact. You've certainly seen in the last 10 to 20 years these large Chinese OEMs not only becoming much stronger in China and much bigger, but also the 3 or 4 with aspirations to be global powers are very much pushed out into the neighboring countries, and you know, the Belt and Road Initiative is kind of a policy tool around that, really, to build economic influence. So yes, I would expect that to be an instrument of increased exports of construction equipment from China in the Southeast Asia region. Having said that, you know, what's going on at the moment in with these Chinese OEMs is they're just completely focused on China because there's so much growth there, and the prospects in neighboring countries are so poor. But if that flips around in 2 or 3 years and China hits a downturn and the rest of Asia starts coming up, then yes, you could see a bit of a different dynamic in those markets.
Okay, thanks for that, Chris. I'm going to leave that there and then invite Paul to step forward and share his screen. If you have any further questions with Chris, we'll try and go back to those at the end towards the end of the session. But just to introduce Paul Lyons is the Market Information Manager of the CEA. He came to us something like 5 years ago after a very long career in the steel industry. Slightly tongue-in-cheek, he did manage to sort of sit at the same desk for many years in the steel industry, but during that course of that time worked for British Steel, Chorus and Tata Steel, with the different changes in that industry, but never quite made it back to British Steel again because he'd already joined us. So Paul, welcome. If you want to share screen and just give us a little bit of an insight what you see happening in the UK market.
Okay, thanks very much, Rob. Everyone see my screen there okay? Yep. Can you hear me okay? Someone speak, please.
Coming through loud and clear here, Paul.
Thank you. Okay, yes. UK market from 3 perspectives then. I thought it would be interesting to talk a little bit about the exports of equipment from the UK to begin with, particularly from looking at the mix of equipment by the major markets and countries, and to compare that with the global equipment sales that Chris has just talked about, look for the similarities and look for the differences. Then to go on and have a quick look at the construction market and the latest statistics and see what that tells us about the where we are in terms of the recovery from COVID. And then lastly, to look at UK equipment sales using the statistics from the data exchange run by Systematics, and again, look at where we are in terms of the recovery situation. So moving on to UK exports, just to look at the general pattern overall. So this is using customs data in financial terms. The historical years there are the quarterly average, and the last sort of year and a half is the actual sort of quarterly levels. And that shows that exports peaked in sort of 2018 and the first half of 2019. So similar in many ways from what Chris described as sort of global demand. There's a breakdown there of the main regions, and the figures across the bottom there show the EU share of total exports, and that's quite an interesting pattern in that it's grown really from around sort of lower 40s into 50% quite steadily across the quarters, across the years. So we could say in the first half of this year, a little bit over 50%, over half of our sales are into the EU. The leading destination, however, on a single country basis is the USA, which is the second bar up, which is around 25%. So you can say immediately from this, so 3/4 of exports from the UK are either into the EU or North America. Quite a distinctive pattern. So just looking at a bit more detail, comparing here. Global sales, the table in the top left with UK exports. So table at the top there is off-highway research data, units in 2019, a little bit over 1 million if you exclude the UK, and a ranking of the main sort of regions and countries there. As Chris has said, China dominates with nearly 30%, then North America, then Western Europe as off-highway cover it, which is the sort of 15 countries, 14 excluding the UK. On the right there is a similar table of a similar nature, but using the UK exports. That's the customs data, so it's financial. And just, I guess, important to say it's not like for like, because have already been highlighted. UK exports will include crushing and screening equipment, and off-highway doesn't. And exports, customs data exports will include used equipment sales as well, and off-highway doesn't. But I think still interesting to do a comparison. So when you look at the mix of UK exports, very distinctive, has already picked up. 2/3 there, either into Western Europe or North America, which is about 1/3 of the global market. So yeah, huge emphasis on Western Europe and North America. If you then look at the three major Asian markets, Japan, China and India, only 3% of direct exports from the UK into what represents effectively 40% of the global market. So a very, very clear and distinctive pattern of where sales from the UK go and where they don't. In terms of Japan, China and India, as Chris touched upon, very strong traditional domestic supply of equipment. So quite difficult to do it from the UK, to have some sort of involvement externally in those markets. Lastly, just to touch on rest of the world, yeah, sort of a pattern that matches to some extent. UK exports about 1/3 to countries outside of those listed, and it's about 1/4 of the global sales of off-highway research as listed there. So the comments at the bottom, just for interest, UK exports, a lot of them to Eastern Europe, rest of the world, with the major countries there. Australia, and I think a fair bit of that is the crushing and screening equipment that we touched on, and also to South Africa as well. Just drilling down one step further, and like Chris, focusing on Western Europe, again, a similar comparison table on the left, ranking of off-highway research sales by units, and on the right, the equivalent sort of customs data in a similar fashion. In this case, quite a match, quite a lot of similarity. So in both cases, Germany and France, the top two for sales and the top two destinations for UK exports. Third place, it sort of changes. In biggest market in Europe beyond those two is Italy. Biggest export destination from the UK point of view is Ireland. Quite a small market. If you look down the list on the left, about 2,000 units or so a year. But from a UK perspective, yes, dominated by exports from the UK, so it creeps well up the list. But if you look down the list of countries there, you'll see that there's quite a good match overall. So yeah, you could say our exports to Europe are very much in line with the ranking of country market sizes based on unit sales. Okay, just moving on then to a quick look at the UK construction market. And at the top here, you've got the latest data from the Purchasing Managers Index, which is the monthly survey that's done, which is regarded as giving a good indication of sentiment within the construction industry. Chart on the top left there shows the overall index, and you can see there the very sharp V-shaped crash and recovery from COVID, and then crashed in sort of April, and in the months since then recovered quite well. And you can see the latest index for September was 56 compared with August in 54. So looking ahead, optimism and sentiment still quite good as the recovery moves on. The chart to the right is an interesting one, just a little breakdown of the main sectors within that. And that highlights within the last sort of 3 or 4 months that it's the house building sector that's been sort of leading the recovery, if you like. That's still, if you can see it very well, the green line above the other two lines on the right there. So that's the soft data, if you like. The hard data below the dashed line there, the comments there show that there's a fair way to go yet. I mean, construction output crashed in April. In the month since then, it's shown double-figure recovery month on month, but then in August shows a little bit of a slowing down, only 3% ahead of July. And that means that across the first 8 months of the year, we're about 19% below last year on a year-to-date basis. Where does that leave us for the year? You might ask. Well, by coincidence, this week, the Construction Products Association published their latest forecast, and they're anticipating a 14.5% fall now for the full year. So that points, given where we are now, towards some ongoing recovery in the final months and quarter of the year, which is, I guess, encouraging, you could say. Their mid-year forecast was for a 21% decline in output, so we're going in the right direction. And their forecast for next year is that you more or less get a bounce back of ground lost this year, so a 13.5% recovery next year, which would take us back to sort of 2019 levels overall. Okay, then third part, then moving on to construction equipment sales. This data is taken from the equipment exchange run by Systematics. They took over the scheme in 2017, and the CEA formed a partnership with them that allows us access to the high-level data, and that's brilliant. That gives us the opportunity to provide updates and bulletins like this. So this first chart just puts the thing in perspective. 2018 was a peak year in the UK after a number of years of growth. 2019, some downturn was anticipated following the peak, and yes, it came down by sort of 7%. But I think in the second half of the year, certainly it dipped a little bit sharper than was anticipated because of some of the uncertainties, political and sort of economic. A further modest decline was anticipated in 2020, but you clearly there, you can see what COVID has done. The first quarter, instead of being a pickup, declined by 21% because COVID started to hit in March. And then in the second quarter, it was down by 53% compared with the second quarter in 2019 as COVID had the full impact. So at the halfway stage, sales in the UK 38% down on the first half of 2019 on a like-for-like basis. To say we always show equipment sales comparison compared with the previous year, because in the UK there's such a very distinctive seasonal pattern with Q2 and Q3 being the strongest. Just looking then at monthly sales, and I'd say thanks again to Systematics for letting us show monthly data for the first time to help us track our way through COVID. It's really useful to see exactly where we are. So you can see there the first 2 months of the year this year weren't too bad compared with last year, and then COVID hit in March. It was 45% down on last year, and then the bottom of the crash was reached, if you like, in April, which was 74% below the sales level last year. Since then, things have been picking up, and the deficit, if you like, on a month-on-month comparison with the previous year, been improving, reduced to 16% in July. Then unfortunately, August didn't quite continue. It dipped back a bit to 29%. And that means in the first 8 months of the year, we're at 34% below last year's levels. So improved slightly from the first half year. September's figures out imminently, so look out for the CEA bulletin on that in the probably in the next sort of week or so. Where might it end up? I mean, if you follow the assumption based on what's happening in the construction industry, the end using industry, and the last quarter shows some further improvement, I think now we may get away with a sort of 30% shortfall compared with last year, maybe a little bit less. The last quarter of the year is always the quietest, so it will always have the smallest impact on the overall annual position, but maybe slightly better than hoped for earlier in the year. So just to finish then, the last slide looks at the mix of the major equipment types in the UK. 8 months sales data this year compared with last year, and it's a sort of best to worst ranking. So just to explain, in that first column there on the left it shows sales at 34% down on last year. So that's the overall position that we've talked about already. And then the next column is the mini and midi excavators, which is machines under 10 tons. And that only shows sales down by 15% compared with last year, whereas all the other major equipment types are down on last year by over 40%. So again, a very distinctive pattern. I talked to a few members about this, and the view seems to be that if you think back about the construction analysis, the strength of the housing market during the pandemic compared with other sectors attracts a lot of smaller equipment types. So that's probably one of the key things that's been helping sales of these smaller machines. Another point that was mentioned is the so-called sort of DIY boom that's been going on during the pandemic, with a lot of people perhaps spending a little bit more time doing work in their gardens and surrounding land, and hiring very, very small excavators that you can drive yourself because you don't need operator training. So again, that's probably chipped in as well. But interesting, yeah, that in the first 8 months of the year, midi excavators accounts for over 60% of equipment sales in the UK, whereas it's usually probably a little bit less than a half. So quite an interesting position. I'll call that the end. I had other two slides, but they're not on the UK construction equipment sales. So quite happy to leave it there and invite any questions that you might have on the UK situation.
Okay, thank you very much, Paul. If you'd stop sharing your screen.
Yeah.
We did have one question come in from Mark Ormond at Manitou, which you may be able to answer, or if Christine or Manuel are on the line, they may be able to answer it straight away, because it was a question of the definition of sale in the systematics data. What constituted a sale? I don't know whether you want to add to your question there, Mark.
Sorry, just to unmute. No, it's just I always get confused, what we're defining by a sale, whether it's when we deliver it, when we invoice it, when we take an order for it. Really just for clarity for everybody, what we mean when we're referring to a sale.
Thank you, Mark. This is Manuel, Systematics. I think discussion has been raised in the past, and I think from our side we've always stated that the delivery of the machine, when it's invoiced, that's when it should be counted into the system. And that's what all the manufacturers, in principle, should be doing. If they are not, and if they're still unsure, then please do let us know, because that was the agreement that we always have in place.
Okay. Thanks, Manuel.
Welcome.
So just for clarity, Manuel, when you say delivery, that's delivery to the end customer, not to the dealer, for those of us that are selling through dealers.
Right. So it's when we say the delivery, it's the invoicing to the end customer. That's right. Because what we want to avoid is the machines to be reported as a stock to the dealers. So it shouldn't be when it's to the end customer.
Okay, thanks, Manuel. Thanks for that clarification. If there's any more detail required, we can do that offline. But and thanks for being in the background there, ready to answer that question. Much appreciated. One other question that's come through, and really it's one I think that's appropriate for both Chris and Paul, is that we saw Paul's figures and the forecasts for construction output in the UK, which seems to show a better recovery rate than the machine recovery rate, and I would guess part of that is explained by the fact a lot of the major plant hire companies early in the year put a bit of a hold on capex expenditure for obvious reasons when COVID struck. But given that I understand that the second-hand market is quite buoyant at the market in the UK, I just wonder whether Chris's figures are maybe a little bit too pessimistic. What's your view, Paul, first of all, and then we'll ask Chris. In terms of recovery for next year.
The recovery, I think it's some of it is just the statistical effect of Off-Highway did their forecast a couple of months ago, and it looks like things were going to be a bit worse then. The recovery in the last couple of months has been quite good, so it might edge towards sort of 30% as opposed to sort of 36, 37%. But yeah, I mean, touching on what you said, I mean, discussions I've had previously show with 2018, 2019 being strong years, a lot of new, relatively young equipment around. I think, yeah, the plant hire industry has adjusted quickly, and yeah, there isn't a need for as much new equipment in a short space of time. I don't know if you want to add any comments, Chris.
Yeah, it's certainly the case that that forecast I presented was put together at the end of August, which, you know, wasn't that long ago, but it does show that things, you know, do move very quickly. I think your month-on-month data showed that you know, the swings can be kind of quite violent. So you're always looking at a bit of a moving target, and all we can do is look at the situation when we make the forecast and review it if we feel it's changed significantly. So yes, you were talking about sort of 30-ish%. We were talking about 35-ish%. There is a bit of a difference there, but they're in the same ballpark. I think the concern that we have about the UK market, and indeed Ireland, is that as the end of the transition period approaches, and things aren't exactly going well with the Brexit negotiations, I think there could well be a slowdown in the final quarter, because people are just going to be so uncertain, and they're just going to go, yeah, look, hang on, if we don't really need a machine this side of Christmas, let's just hang on and see what happens with Brexit. You know, there is a school of thought that if you think you need a machine and it'll be imported, you should definitely buy it now, because from January the 1st you'll certainly have some more customs paperwork to deal with, and maybe a tariff as well. So, you know, there may be almost a sort of a pre-buy effect, but we think that's probably overruled by just the general feeling of uncertainty that prevails at the moment.
Yeah, I think the other point we should make, Chris, and I often talk to some of your colleagues about this, is that there are various systems, if you like, and companies that measure the UK market, yourselves, Systematics, and the CC statistics as well. And when you look at the ranges of equipment covered, they're all slightly different, and that always often leads to a couple of percentage points difference for the same time periods. So it's always important to appreciate that the messages are the same, even though there might be a few percentage points difference in the actual sort of numbers. So don't get too hung up about that. We're all saying the same thing, whether it's 30% or 35%, it's still pretty bad. So yeah, just to bear that in mind.
Okay.
Yeah,
thanks, Paul. Thanks, Chris, for that. That's an interesting discussion. Got time just for one more question from the floor, if you like, if anyone wants to unmute themselves and throw something in. As I speak, there are 6 people asking questions, but have forgotten to unmute. Okay, I think that's good. So I'd like to, on your behalf then, to thank both the speakers today, to remind you that the whole thing has been recorded, and the slides will be available on the CEA website before too long, so you can dip into those numbers. And again, thanks to Systematics International for their support for this, as well as for Off-Highway Research, and be able to share some numbers. Just to another date for your diary, 16th of November, which is a Monday. We have Brexit and Beyond. We think by then we'll know exactly what's happening next year. And leading those discussions from a political and experience point of view is Malcolm Harbour, one of our patrons, who's a former MEP, and we'll have some other speakers there. If you are interested in the technicalities of Brexit, particularly in the regulatory area, the sort of things that you should be doing from the 1st of January, don't forget that our General Technical Committee is very active on this subject. if you're not on the mailing list for their work and for invitations for their meetings, please contact the CEA office and we can make sure that you're included if you're already a member of the CEA. And we have some further things in our coming soon list, which I haven't read myself, so I'll just read it to you. Early November, yes, we're probably looking at the international trade aspect of Brexit and post-transition world. In December, we're looking on more technicalities around hydraulic controls, machine automation. Husco and some others are going to be involved in that, so that should be good. And then on the assumption that we get through to 2021, we're going to have a special session on HS2. We're working very closely with them at the moment. And don't forget, that is still the biggest construction project in the whole of Europe at the moment. So that's something I think we can be proud of. That just leaves me to say at 2 minutes past 2, so I've failed in the chairmanship here, but just to thank you and say goodbye and have a good rest of the day. And if there's anything we can do for you as CEA members or even people that are joining us as guests today, please do contact us. And thank you very much for joining.